The global monetary system is one of debt. Maximum debt can equate to maximum wealth. There is a complete and distinct correspondence between the amount of debt and select asset prices. No longer is wealth created by hard work and dedication. It is formulated by a computer algorithm acting against your favor. You came here for the truth, so let me unveil that for you. Today we are going to get into these 10 charts. Stay with me. I'll move through it as fast as possible. We are looking at silver and gold, and you can see what has happened. Gold and silver primarily chasing each other at this time. And while there are differences and fluctuations, gold and silver for the most part are ones that rally together. You will note that there are extreme levels of manipulation taking place within the gold and silver markets. And I believe this is very easy to do versus some other, let's say, fixed income, for example, because the markets for both of them are very, very small. There is only so much gold and silver out there, and it is very clear to me that when the markets are smaller, it is extremely easy for the computer algorithms to go out there and manipulate as they see fit. Let's just move on very quickly. Looking at this, the S&P obviously hitting new highs. It's doing very well, and nobody can deny that. What about the commodity index? Well, in the past few months, it is taking an absolute beating. And what type of commodities are we referring to? I would say that many different commodities, including industrial metals, have seen a dramatic fall recently. This is something that tells me that we have a cause for concern in the near future. I don't know what's going to happen exactly, but these better reverse course right away or we have a problem. This is something very interesting. As you can see, the Dow Jones, right at that very last minute, getting a nice little boost from the algorithms, pushing it just up and over the 21,000 mark. Of course, these are all psychological numbers, and there are also the algorithms which are programmed to buy at certain levels and sell and everything else. So I do believe that was an intentional lift up at that time. I would also like to note that you can see the VIX trading within a range throughout the day. I mean, there's a clear and distinct range that's been forming. Look, it just zigzags up and down, but never really goes around beyond those levels. And you have to start wondering, are the markets trading naturally to any degree? Is there any semblance of reality in these? And I would have to say it seems unlikely. Now, check this out. There's a few charts here in a row I'm going to show you. Total system leverage, government, corporate, household, and margin in banks versus the gross domestic product. And you can see a great divergence in between these two. The GDP, which is a fake number as it is, but then you compare that to the total system leverage, and you have a very serious problem. It cannot be supported by this. It's going to have to be supported either by crashing down and finding its new happy medium, or being supported by the Federal Reserve, by central banks. Total system leverage versus the S&P 500. And you will note specifically that they trade very, very well together. You can see wherever there are spikes, they come together. Whenever they are heading their way down, to somewhat of a degree anyway. And this is telling me that the more debt there is, the higher the S&P, the higher the Dow Jones and all the other markets can go. They trade together. Debt is the new wealth. Total system leverage versus the GDP. And this connects in with the next chart as well. Yes, the total system leverage versus the GDP, we can see that going up, clear. However, the GDP itself, when you think about it, has, since, of course, the downward trend in interest rates has declined. And that has become a very serious problem. People don't really realize how important that is. Total system leverage, but showing you specifically required for $1 of GDP, and that is the shaded in area. And there is something that is very clear, once again, that you have to figure the more time that goes on, the less these dollars buy. And that's what this chart is showing you. The money doesn't go as far as it used to, whether it's in relation to debt or whether it is in relation to you going to the store. And look at this. Japan has been supporting its economy for quite some time. You'll see the ETF holdings are ridiculous right now at this time in Japan. I mean, they've bought basically everything. I think it was 2/3 of all the ETFs. And you look at the stock market, it has been rather stagnant for a little while here, but I mean, they can push it up if they need to. That's not the issue. The question is, how much of the stock market percentage-wise is the Bank of Japan willing to purchase? And I would say 100% would be a realistic number. And essentially all this is trying to show you is that anytime there's a dip, the central banks are there to backstop it. And this is a very clear chart. Here are 10 charts for you that show you this dismal present, forget about the future, but present. If you just extract the share prices from the equation and you look at the other indicators out there, because share prices, equities, let's say, are one indicator of the economy. But that's within 1,000 indicators is just one. And that's what I really don't get about some people who claim that just because the stock market is going up, that somehow the economy is doing well. I just don't understand it. I really don't. Look at how, and I've shown you this before, the pension prices, the pension funds are going bankrupt at the same time the stock market is rising. How's that possible? How's it possible that there are shortfalls everywhere in government? The stock market's rising. People are supposedly doing better than ever. Consumer confidence is up. Yet, they are not doing well. That's the reality. Now, I'll leave it at that. I really like to show the charts. I don't like to get into too much detail on all the technicals, but I really like to show the charts because it's visual, it's in your face. People see it and they instantly can relate and understand it. I hope you appreciate the charts. I don't like to do every video about charts, of course, but I hope you appreciate that I include these and that I do videos dedicated to this. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. The new book is basically about becoming self-sufficient. It does cover familiar subjects from the first book, which is talking a lot about the 4 asset classes, how you can profit from that, and really goes into detail about that. So they work synergistically together. So I hope that if you're interested, you're going to go over to Amazon, look at the Look Inside feature, which allows you to flip through the pages of the book and see if you like it. Take care. Now, I don't want to get ahead of myself here, but I think I found something very interesting about what's happening with my YouTube channel, and I'm not going to do a video about it yet, but I'm just going to monitor this. In the last couple days, I received the lowest amount of views that I have in a very long time. And while I'm okay with not getting as many views, you know, as long as my true fans are listening, and by the way, if you've made it this far, you're probably a true fan, that you look at the views I got on that video in that day, and let's say I got 3,000 views within a 24-hour period, then I look at the analytics and it shows, let's say, 2,000 views. Just on one video, I would have gotten, let's say, 3,000 views plus all my other videos. And then I look at my analytics and it's showing me, let's say, 2,000 views. Something's not right. Forget about the AdSense. That's been terrible. That's been terrible for a long time. But the actual views, that's what I'm worried about. I'm looking at the view counts, which I think are manipulated to begin with. But just going by the view counts that YouTube is showing me doesn't match up to what the analytics are saying. And that, to me, is very strange and is very concerning, actually. Anyway, just wanted to bring that to you. And I'll try to get some more info out as soon as possible, so stay tuned. Take care.